Bitcoin volatility. That's what everyone seems to talk about. As the stock market goes up and down, doing all kinds of crazy things based on what the Fed is saying, Bitcoin is held pretty steady. And I mentioned this in my previous video, that Bitcoin is held pretty strong. But what is on everybody's mind, irrespective of that, is the fact that Bitcoin was at 69,000 and has dropped so much far as 17,000, 15,000, spike down and come back up. And so there is this volatility in crypto that's inherent, being a baby market or a growing market, and still fairly new. It's only been 12, 13 years or so that this has been going on. So as it matures, it will steady. But that's what's on everyone's mind is, how do I handle this volatility? For the most part, most people say it's too volatile. I want no part of it. So I want to share with you today someone who has quite a bit of knowledge in the space, someone who has helped many hundreds and thousands of people, including myself, come into the space and kind of get our head right along the space. If you don't already know who that is Teeka Tiwari, very seasoned individual, both in traditional finance, but now and over the last several years, heavily all into crypto. So I want to share a little clip with him because I've said it many times, but it's always best to hear it from someone with this stature. So let's play this out for you.
Okay. The bottom line is, in my opinion, it's a mistake to overly focus on the day-to-day action on the price of Bitcoin. The way that on any given day, we have no idea how high or how low Bitcoin will go. And I remember early in my Bitcoin journey, I used to agonize trying to figure out what those numbers were. And at the end of the day, it's a complete waste of time. I don't know. Nobody knows. I mean, you can take a look at a chart and you say, okay, you've got support at 17.5. If 17.5 doesn't hold, maybe we go to 15K. But who knows? If there's huge leverage positions, maybe we go to 12K. Maybe there's a short squeeze and we go to 30K. The bottom line is, in my opinion, it's a mistake to overly focus on the day-to-day action on the price of Bitcoin. The way that you really want to handle Bitcoin is to dollar cost average and let time do the heavy lifting with your position, because there are so many other factors going on behind the scenes that have nothing to do with us and frankly have nothing to do with Bitcoin. On any given day, we have no idea.
All right. So lots to unpack there. But this is so key, and I want you guys to really focus on this. There's a few things here. One is, anytime someone new comes into the space, myself included, I'm going to use myself as an example. We all came in thinking, I need to monitor this day to day. Not even I need to, I want to, right? Depending on what the market is doing, things can get crazy and you can get wrapped up into thinking riches will be around the corner, or, things will go to zero around the corner. It's one of those things. So because crypto never sleeps, Bitcoin never sleeps. It's 24/7, 365 days a year where you can continue minute to minute, second to second, you can look at a chart. It's not like the stock market where it's 9 to 5 and then things kind of close down, or 9 to 4, 9:30 to 4 for some areas. But there's no set time. Weekends aren't off. You can always do that. So you get caught in the grind. You get caught in watching your portfolio all the time, like I did. And that's not a good way to remain sane. And it's definitely a great way to lose sleep and have issues with your health because of that. So when he mentions that hits home for me, because that's what I did for a very long period of time. And from what I've seen, almost everyone, if not everyone, starts that way. So you got to remove yourself from that mindset that I need to check this, and by checking it, something's going to change because I'm looking at it. Nothing's going to change. It's not going to happen. Bitcoin will do what it wants to do. The markets will do what they are going to do, whether you check them or not. So you need to keep that part in mind. That's number one. Okay, stop checking your portfolio minute to minute, hour to hour, even day to day. Maybe once a week. Maybe a couple times a week. That's really where you want to get to if you're not already there. Secondly, he talks about there are external forces involved that have nothing to do with you and I. And when he mentions short squeezes or other things that happen that can depress the market or depress Bitcoin or make Bitcoin spike, you have no idea what those are. And there's a bigger market at play. There are tons of factors in here that have nothing to do with whether you invest or not. It's interesting, actually. A friend of mine who invests alongside with me, we joke, right? And he mentioned this. He's like, every time I invest, I know whatever I invest in this case, Bitcoin, is going to drop another 20% as soon as I invest. That's just the feeling we have. It may not even be the case. It's not the case. But we register these things, especially when they're not positive scenarios. We register them as if they happen all the time. But that's because we check it all the time. So things can go down because of external factors, thinking, push up and have nothing to do with you. When you are constantly engaged and constantly looking at your portfolio, it wears on you. And you either get burnt out or you say, this is too volatile and it's not for me. So that's this part of it, understanding that there's more at play here than your investment. And third, that he said, that is the crux of everything here, is to dollar cost average. What does that mean? That means is that you are buying, hopefully, at set periods of time for a set amount, if you can do that. So whether it's bi-weekly, you're buying $100, $500, $1,000, whatever it is, it's a set period of time. So every 2 weeks, every month, whatever that regular interval is for you, and a set amount. And you're just buying. You don't care if Bitcoin's going to 17,000. You don't care if Bitcoin's at 23,000. You just don't care because you're buying in pieces. And over time, it's been proven that dollar cost average strategy has significantly done better than anyone who's actively managing their portfolio, where you're just constantly looking at it. So those are the things that really help you sleep at night. Those are the things that will allow you to stay longer in the space and to really get a grasp of more than just price action, right? He mentions the market and Bitcoin's value is more than the price of Bitcoin. There's much more to it. But you never get to see that. You never get to appreciate that if all you're doing is focusing on price action. It will slowly beat you down. So if anything, I have said this many times, but today you got to hear directly from Teeka Tiwari's mouth. Someone who's seasoned in the game, someone well-respected, someone with stature, not only in this space, but in traditional finance and Wall Street in particular. Listen to what he's saying. Try and take what he's saying and actually put them into practice. Because what most people will do is they'll listen and they'll be like, yeah, I got it. And then they'll go back to doing the same things over and over again. So stop looking at your portfolio regularly. Pick a set time, a set day. Maybe it's a Thursday, maybe it's a Friday, maybe it's a Monday. Try and do it 1 day a week. And just that's it. I don't even do it weekly, okay? So pick 1 day a week. Make sure that in your brain you understand that your investment, especially if you're not putting in large sums of money, it's not moving the market up or down. Nobody cares. So understand that there are forces bigger than you who will actually move the market, and we're just trying to get our piece. And that piece, which is point number 3, is by dollar cost averaging. These are the ways to take care of your sanity within the space and how to handle volatility. Here's a couple other videos that I've released. One will give you tips on volatility, but even just how to manage your portfolio.